Hi, welcome back to the channel. In today's episode, I want to talk to you about what's happening in the economy in the United Kingdom because there has just been a budget announced, and I wanted to go through the implications of that budget, but also to talk about the problems in the UK economy and actually what wasn't included in the budget, because I think it's too easy to get drawn into just looking at what was announced and then saying whether that's positive or negative. But actually, is it addressing the fundamental issues that are going on in the UK right now? Now, before we get into the details on all of this, I just want to ask anybody that hasn't subscribed to hit that subscriber button, because whenever I post a video on the United Kingdom, I always see my subscriber numbers going down because I think people who are only watching the channel for videos on Russia, and I put my hands up and say, yeah, okay, I've made a lot of videos about Russia, over 700 actually, just had a quick look at the numbers. So if you're only interested in Russia, you don't need to unsubscribe because I've posted one video on the UK, because I'm going to post more videos about Russia. So you're being very picky to unsubscribe after one video. But also, I just want to see some support for the UK. And I've just checked the numbers. I've made over 140 videos about the UK. So if you're one of those people who sent me a message saying, why don't you ever make any videos about the UK? I have. I've made loads of them. The problem with them is that they don't get as many views, and I get unsubscribed whenever I post one. So to really push back against that trend, please hit the subscribe button. Please like this video because that will help it with the algorithm and help YouTube to promote it and encourage me to make more videos about the UK. Anyway, enough about all of that. Before we get into the details on what was announced in the budget, I just wanted to go through what the problems are in the UK at the moment. So if we have a look at this chart, it shows the quarterly GDP growth rates for the UK over the past 3 years. And what you can see here is that in 2025, we've got a severely downward trend. At the start of the year, the first quarter, growth was 0.7%. It then fell to 0.3% in the second quarter and was only 0.1% in the third quarter. Now, obviously, that's heading in the wrong direction. And if we have a look at the monthly breakdown, you can see that the last 3 months, July, August, and September, has been in negative territory. And the figures for October have just been released, and they were also a fall of 0.1%. So the UK is struggling right now with growth. It's actually looking like it's going to see declining GDP in the fourth quarter of 2025. And as you'll know, if you have 2 quarters of declining GDP, then that's officially a recession. So the last thing that the government wants is for the UK to go into recession. And one of the issues that the UK is facing is the amount of debt that it's been taking on, because it's been spending more than it's earning. And like all of us, if you spend more than you earn, then there's only 2 ways of funding that, either from your savings, and the UK doesn't have any savings, or from borrowing more money. And that's what it's been doing. And if we have a look at this chart, it shows the increase in public borrowing in the UK over the last 10 years. So you can see that we've got almost a 45-degree angle here in terms of the growth, particularly since the COVID pandemic. And the problem with this increasing debt is that it's placing a further burden on the UK cash flow, because the cost of this debt is going up. Obviously, if you've got an increasing amount of debt, then you're going to pay more interest. But unfortunately, there's a disproportionate increase at the moment as a result of the fact of a huge increase in borrowing costs. This chart shows the increase in 10-year yields in the UK. So this is basically the price of government bonds that it's issuing, which is the main form of debt that the government takes on. And you can see that between 2016 and 2022, the cost of those bonds was sitting somewhere between 0.1% and 2%. So that's pretty cheap in anybody's language. But unfortunately, since 2022, we've seen a rapid increase in the cost of the debt, and it's now sitting at around 4.5%. And the problem that the UK government has is twofold. Firstly, it's taking on more debt. So all of that new debt is now being priced at current market rates of 4.5%. And secondly, all of the old debt is starting to mature. And that old debt was issued at very low cost. And when it's maturing, it's being repaid by issuing new debt. That's basically what you do with a bond, unless you've got spare cash. You have to issue a new bond to repay the old bond. So we've got old bonds that are maturing at less than 2% being replaced by new bonds that are being priced at 4.5%. So that's a 2.5% on average increase, in addition to the increase in total borrowing. So that's one of the reasons why the UK government is facing a cash crisis, because the debt is increasing and the cost of the debt is increasing disproportionately. Now, in terms of the problems that this is now causing, this chart shows the unemployment rate in the UK over the past 3 years. And as you can see, there is a sharp increase in the unemployment rate over the past 12 months, and it's now close to 5%. So that's materially higher than it has been in the past. And also, we've got a problem with inflation. So this chart shows the movement in the rate of inflation over the past 12 months. And you can see that since April, inflation has been above 3.5%, and the target rate in the UK is 2%. So that's more than 50% above where the UK government wants it to be. Now, it did come down slightly in October to 3.6% after 3 months of 3.8%. But that's still a lot higher than the Bank of England wants it to be. And if we have a look at this chart, which shows the increase in food prices, you can see that the situation is actually worse. Currently, food prices in the UK are increasing year on year by 4.9%. So that's significantly more than double the target rate of 2% set by the Bank of England. And the problem with food prices, as we've discussed many times before, is that they disproportionately impact the poorer members of society, because they spend a larger percentage of their weekly, monthly budgets on food. And so when food prices are rising at these sort of rates, it means that they have less disposable income. Now, one of the key targets for the Bank of England is that rate of inflation. And so interest rates, which you can see here over the past 3 years, are adjusted to try to get inflation to be at that 2% level. Now, over the past 12 months, there have been a number of interest rate reductions in the UK, and the current rate is now 4%. However, that's still a lot higher than it was historically. We had very low rates in the UK for a long period of time. They were down to virtually zero, and everybody got used to that pricing and took on large amounts of debt. And just like the government bonds, a lot of that debt is now maturing, because the way house purchases work in the UK, people take a fixed rate mortgage only for a limited time. So quite often it will be 2 or 5 years. So all the loans that were taken out 2 or 5 years ago, a lot of them are now maturing. And so borrowers are finding that previously they were borrowing at really good rates, maybe 1 or 2%, and they're now having to remortgage at 4 or 5%. So that means that the payments on their mortgage are doubling at a time when the economy is slowing down and unemployment is rising. So there are a number of different factors that are weighing down on the UK economy right now. And so the budget that was just announced really needed to focus on trying to boost productivity, increase GDP to get the UK economy kick-started again. So what was actually included in the budget? Well, I've summarised the key points here. Obviously, there's a lot of different things that are announced, but we'll just go through the main issues. I think the biggest news was that the threshold on income tax is now being extended until 2031. So normally the thresholds go up each year because you allow an element of inflation in the economy. So you don't want to keep taxing people for earning more money. You want to allow them to have the same sort of benefits that they had historically. But extending this to 2031 means that more people will now be pulled into the higher rate tax brackets. So they'll be paying either 40% or 45%. So basically, this is a stealth way of increasing taxes. It doesn't actually change the headline rate of tax, but by not increasing the bands, it brings more people into those bands, so more people will be paying more tax and they'll have less disposable income. There was also an increase in the tax on dividends, property income, and savings. That's gone up by 2 percentage points, so that's going to mean more people paying more tax. Now, there's a scheme in the UK whereby you can actually sacrifice some of your salary and put it into your pension, and that did have an unlimited cap in terms of how much you're allowed to do. But from April 29, there will now be only 2,000 included in that. So a lot of people who've been doing that will then have to pay more tax. So once again, it's more tax. Now, what's being called the mansion tax is a tax on all properties that are valued above £2 million. People who live in those properties will have to pay an annual amount. So if you live in a house over 2 million, you have to pay, I think, 2,500. If it's over 2.5 to 3.5 million, you'll pay 3,500. All the way up to a 5 million plus property will pay 7,500. So most people in the UK don't live in houses valued above £2 million, but there are a lot in the London area, including flats and apartments that are valued very highly. So this will capture lots of different people, particularly in the capital of London. But I don't think most people are crying over this. But if you live in a massive mansion, then unfortunately, you're going to have to pay more tax. There was also an announcement that there'll be a crackdown on tax avoidance and business reliefs will be tightened. But one of the things I wanted to talk about in this video is what wasn't included in the budget. So there were no cuts to headline tax rates. Well, not surprising really, because the government is actually in a black hole at the moment. They've got a massive shortfall in terms of the amount of revenue versus their spending. So they were unlikely to cut taxes. But if they wanted to stimulate the economy to boost GDP and productivity and growth, then they could have done that, because that potentially would have encouraged more people to go into work and also just expanded workforces. Because when you increase taxes, it costs companies as well as individuals. And that's one of the problems that we're still suffering as a result of the previous budget when national insurance was increased. On that issue of productivity, there were no announcements of any large industrial strategies, investment stimulus, or long-term growth programs, which could have actually helped business in the UK. There was no help for mortgage holders, as I mentioned earlier. A lot of people are facing a huge increase in the cost of their mortgage. They took on large amounts of debt during the pandemic and are now struggling to be able to pay the interest on that. There was no public sector investment increases into the NHS, social care, education, or transport, no reforms to boost business investment, and no housing market intervention. So all of those different ideas could have helped to boost GDP in the UK, but none of that was put onto the table. This was literally just a way of increasing taxes in a sort of under the radar way without failing against that promise not to increase taxes. So what's the summary and conclusion today? Well, I wanted to post this video because we've been talking about the UK for a long period of time, and unfortunately the UK economy is not in good health at the moment. It's really struggling with its GDP. We've still got problems with inflation, and those problems with inflation are causing interest rates to be higher than everybody wants them to be. Lots of people and businesses took on debt during the pandemic, which is now increasing in price, and the UK government has taken on £2.9 trillion worth of debt, and the cost of that debt is rising on a daily basis because bonds are much higher priced today for the UK government than they were 5 or 10 years ago. So we've got a lot of problems going on right now that need to be solved. And in today's video, I wanted to go through a recap of where the UK is and to look at the budget in the context of how to solve these problems. Now, the problem that the UK government has is that when they came into power, they made all of these statements saying, we will not increase taxes. They then realised that the UK was growing at a slower rate than they expected it to, and that meant that there was less revenue coming in the form of taxes, and that left them with a black hole of more than £20 billion. And in order to fill that black hole, this budget has been designed to increase taxes, but not officially. So none of the tax rates have actually changed. So we haven't seen an increase in VAT or income tax rates. But what we have seen is an increase in the number of people that are going to be caught in the higher tax brackets. So whilst the brackets haven't changed, the actual increase in salary that you have to hit to get there is not moving for the next 6 years. And so more people, as they get pay increases, because everybody's going to get a pay rise over the next 6 years, you'll get at least a cost of living increase. Maybe you'll get promoted. Maybe you'll get a 10, 15% rise. Who knows? But you're likely to move into that higher rate tax bracket. And that means that every single pound that you earn once you're in that bracket will be taxed at 40 or 45% compared with 20% previously. So basically, you're paying double the amount of tax, or even more than that, on every single pound of additional income that you earn. So this is an interesting way that the government have gone about it. In terms of headlines, they haven't increased the tax rate, but actually they've increased the amount of tax that will be paid in the UK by not changing those limits. So that's quite an interesting way of going about it. But the problem, I think, with the budget that's been announced is that it doesn't solve the fundamental problems going on in the UK right now. What Labour has done is tried to hit its original statement of not increasing taxes and tick the box on that, rather than fixing the problems in the economy. Because if the economy isn't fixed, if GDP doesn't start to grow at the same rate that it was growing historically, then what that will mean is revenue will continue falling because less tax will be paid. So even though Labour hasn't increased the tax rates, by changing things the way they have isn't going to help the economy to grow, and therefore will leave them with a bigger shortfall over the longer term. Now, one of the big problems that is continuing in the UK is that inflation is sitting at almost twice the target rate of 2%. And the Bank of England, which is independent and controls interest rate, is focused on getting that inflation down to 2%. Now, at the moment, there's a fine balancing act between keeping interest rates high to bring inflation down and keeping interest rates high to break the economy, because the higher the rate of interest, the higher the cost of everybody's borrowings. If you've got a mortgage or you've taken a loan on, if you're a business that's having to borrow money to fund your losses at the moment, because lots of businesses are struggling with the national insurance increases that were increased back in November of 2024, then all of that debt is going to cost you more. And that's what's happening across the board in the UK. And it's also happening for the UK government. One of their biggest expenditures now is interest on the debt that it's taken on. And the bigger the black hole, the bigger the debt, and the bigger the problem. And I think fundamentally, my overall assessment of today's video is that the budget, whilst it pleased quite a lot of people that there was no increase in taxes, it didn't do a lot to actually stimulate the UK economy. And the UK economy really needs a kickstart right now. So Labour has got away with this budget in terms of everybody's thinking, well, it wasn't too bad. It was actually okay. I can live with that. Maybe if you're living in a house worth £2 million or more, you're not saying that. But for most people, they're thinking, well, this is all down the road. I don't have to worry about an increase in my tax rate until next year or the year after or whatever year it might be, because it hasn't actually increased taxes immediately. But what it hasn't done is fix the issues going on in the UK right now. And until those problems are solved, the UK is rapidly heading towards stagflation or potentially even a recession. We have seen GDP falling in 3 out of the last 4 months. If that continues, then the UK will see a fall in GDP. It will go into negative territory in the final quarter of 2025. And if that continues into 2026, then the UK could easily be in recession by the first half of 2026. And that will present even more problems for the government and mean that they're going to have a bigger black hole. So hopefully you've enjoyed today's UK video. If you did, then please give me a thumbs up. Please subscribe if you haven't done so already. Thank you so much to everyone that supported me. If you bought me a coffee, sent me a YouTube super thanks, or signed up as a Patreon, a YouTube member, or a Buy Me a Coffee member, thank you for that support. Really does help to keep me motivated. And here's something to put a smile on your face.